My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make some money. My job's not just to entertain, but to put it all in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Everybody loves to obsess over the macro. What will happen with the debt ceiling? What will the Fed do next? How bad is commercial real estate? And they love to talk about trading instruments like the volatility index or the regional bank ETF or the major averages, which includes days like today, where the Dow slipped 57 points, S&P dipped 0.46%, NASDAQ shed 0.63%. Of course, you need to have your view of this big picture stuff, and I don't deny it, because there are long-standing patterns that are impossible to ignore. Lower interest rates do tend to drive stocks higher. The volatility index tends to spike when there's uncertainty over the debt ceiling negotiations. You're not going to learn anything from me on that. But at the end of the day, I still believe the best money can be made by picking individual stocks. So many experts will tell you to stick with index funds. They argue you'll never be LeBron James, so just stay in the stands and bet on a basket of basketball players, regardless of how good they are. You never know which of the 500 players in the S&P will pan out. Now, that's fine. I have some index funds. You do too. But I don't buy that's everything. And I'm guessing you don't either. Or else, why would you be watching this show? It's just counterintuitive. You've got your index funds, I've got your index funds, but you want to learn how to pick stocks. So that's why tonight I want to walk you through what I call the craft of finding high-quality stocks that I think can work. And I like to teach the craft. I was going to be a teacher. Instead, I took this show. See, I'm not talking, this is not about coming up with ideas. Ideas are everywhere. This is about the process of sorting through the ideas once you find them and figure out which ones are viable investments and which ones are dangerous and you need to be avoiding. So how do you find a good idea before others take it higher? Well, you need to be curious, you need to have some ingenuity, but most important, you need a process. Tonight, I want to show you a sorting mechanism that I've used for 40 years to spot potential money-making ideas. Yep, instead of dwelling on the unknowable, when will we resolve the debt crisis? I don't know, you don't know. Hey, why don't we use this as a teaching moment about how to find winners, maybe avoid some losers. Now, part of my craft is to start with ideas that the market likes already, all right? Check out the day's big winners. To do this, when I'm done my morning meeting show that I do with Jeff Marks for CNBC Investing Club members, I look to see which stocks are up the most on a percentage basis. It's something I do instinctively. Now, today when I did it, I spotted the name Trex, T-R-E-X. They used to be a frequent guest on Mad Money. Trex makes decking, chiefly out of recycled trash. About 95% is recycled trash. Now, I like the product, but that's neither here nor there. That's not what we're talking about. Trex had just reported a tremendous quarter last night, and it was up about 8% when we finished our mid-morning show. So I said, well, morning meeting, go check the things. Sure enough, 8%. Now I'm interested. Trex surprised to the upside when it reported because while there had been too much decking inventory that had depressed the price of the stuff, that glut was now gone. Trex saw a sequential improvement in its gross margin, meaning there must be stronger demand. They wouldn't be able to get higher prices for it. Now consider me really intrigued, but not about Trex. Trex is done. I missed that. Trex's stock is already too high. I'm using Trex to find out about other ideas that might work, not Trex itself. So you got to dig deeper. I keep going through the Trex conference call, and I stumble on something exciting, and I'm going to quote it. Our data indicate that the North American consumer remains active in undertaking outdoor living projects, and that generally contractors have strong backlogs entering the busiest part of the season, end quote. Wait a second, I think. Strong backlogs, contractors? Now, that's a genesis of an idea, especially when you expect that they wouldn't have strong backlogs because of the 500 basis points of pain that Jay Powell has given us. Remember, we're in a rate tightening cycle. The contractors should be losing business, not gaining business. But it's not enough to just have that idea. You want a relatively undiscovered or maybe an idea that's against the grain. So then I checked the Wall Street research to see if this story about contractor backlog is well known. I see nothing of import. That's good. Now I'm beginning to think maybe we should be buying or thinking about buying Home Depot and Lowe's. They report soon. Maybe there's something there off this Trex call. Maybe one of those two could be worth buying. Wait a second. Maybe Trex is an oddity. Maybe it's just crushing it and killing a competitor. Maybe it's not good for the industry. So we need to do another check, a decking check. This time we go to AZEK. It's another company that's been on the show. That's Trex's high-end competitor. They reported on May 4th. So I pick up the AZEK conference call, and I get this quote from CFO Peter Clifford. It jumps right out of me. Quote, from a macro perspective, we are seeing a more constructive environment in our residential business year to date, while experiencing a more challenging environment for our commercial segment. Clifford then gives you another clue. Residential sell-through demand continues to be modestly better than our original assumptions. Residential channel inventory is at levels that are well below 2017 to 2019. Yes, that is good. Not conclusive, but it's good to know that it's the commercial for housing, but not commercial in big buildings. Remember, we don't like commercial real estate, right? You hear that all the time. We want house construction, and we're hearing good things now from both Trex, and we're hearing it from AZEK. So now we got to figure out whether we want to buy Home Depot or Lowe's. So what do? Well, then you got to marry that information with two recent conference calls of other industries that also sell into those stores. How about Stanley Black & Decker and PPG, the paint and the coatings company? Now, these are both fantastic resources. On April 21st, PPG CEO Timothy Navish answered a question about professional paint contractors, saying backlogs have remained surprisingly robust despite everything you see in the news and despite what's happening in construction driven by labor shortages primarily, so the backlogs remain strong. Yes! That is terrific. That confirms my Trex AZEK thesis. Now we go to Stanley Black & Decker. They give us more. On May 4th in the conference call, CEO Donald Allen explains, quote, the trend around pro continues to be very healthy. We're not seeing any major shifts in that dynamic. Even as he says the consumer side, the do-it-yourself, that's tepid. So now I'm starting to think, well, I'm piecing it all together. The professional contractors working on residential homes, not commercial projects, are, contrary to popular opinion, doing quite well. Much better than expected, but not so the do-it-yourselfer. So then we go through the read-through, and this is where you really got to be thinking. Now, you process all your information. Contractors, where do they go? They tend to do most of the shopping at Home Depot. Lowe's is more consumer. They do more do-it-yourself, although CEO Marv Ellison's been working hard to bring it in the more pros. Still, if you want to bet on contractors who do home refurbishment and home construction, you've got to be betting on Home Depot. So could there be a good trade here going in earnings? Only if our thesis runs contrary to current Wall Street research, because otherwise it'll already be pricing the stock. Are people thinking like I am? No, because I've checked Wall Street research for both Home Depot and Lowe's, and it's astonishingly negative. And a matter of fact, there have just been two reports that have just come out saying, you know what? They're not doing well. Remember, if everybody already liked Home Depot, there's no opportunity. This research indicates a distaste for the stock, and that may create a terrific setup. Now, nothing can be done in a vacuum. You don't want to just slap on a trade because you finished your work. Home Depot reports on the week of the 16th. That's the catalyst. But we're still a week away from the 16th. Between then and now, we're going to get some negative story, right, about the debt ceiling, some bear raid, maybe on a regional bank. You could drag the whole market down. Based on my work, I'm tempted to wait for that pullback and use it to buy the stock of Home Depot for a trade. Right now, stocks on the cusp of having a 3% yield. It's got a $15 billion buyback. I like that trampoline. Then I checked the chart. Yes, the chart. I can see it's at a crossroads. A potential head and shoulder could be developing. But if the stock holds right here and then turns up slightly, then the pattern changes to something more hospitable. I care enough about the charts to look, if only because so many traders take their cue from them. So let's bring it all together. Here's what I do. If you want to trade at all, don't forget this kind of short-term bet is totally optional. I am using it to demonstrate the process of low-risk idea generation. You'll want to wait a couple days to see what happens. But if we get a market-wide sell-off sends the stock of Home Depot lower, then I would be sorely tempted to buy it ahead of the quarter once I've gone through this checklist. Bottom line, there's something more important than buying Home Depot that I'm demonstrating to you. I'm demonstrating to you the craft itself. I can't guarantee a win with this one. Maybe the whole exercise produces nothing, like fishing without a catch. Can't win them all. But if you can get into Home Depot at a lower level based on the exercise that I just went through, let me tell you something. It could very much be worth a shot. And that's how it's done. Joe in New Jersey. Joe.
Hello, Mr. Cramer. Thank you for taking my call, and thank you for all that you do for us, and for especially stressing on the importance of diversification.
Absolutely, we have to. That's why I like S&P funds, but I also like individual stock picking. How can I help?
I've owned Qualcomm for a couple of years now, and with their weakness in sales to Apple, should I still hold on to it?
I don't want you to own that stock. I listened to Skyworks last night. Skyworks is a good company, much better than Qualcomm. Qualcomm, I think, is doing quite poorly. They talk a big game, and I got to tell you, here's my word on Qualcomm. Actually, it's 3 words. Sell, sell, sell. I can't guarantee you win with what I just went through with the stock of Home Depot, but I do believe in getting the stock at a lower level after the process that I showed you. It might be very much worth a shot. Mad Money tonight. Speaking of stocks at lower levels, Exponential Fitness is behind all of your favorite boutique fitness brands. Maybe after pullback, the stock could be investable. Let's work it out together. I'm checking with the CEO. Then, how could the strength of the dollar impact a host of assets from stocks to commodities? I'm going to go off the charts to find out, and you will be surprised about the answers. Yesterday, by the way, I told you that travel and leisure is one of the sectors showing strength amid uncertainty. So could Boeing fit into that thesis of trying to figure out whether we still have some economic activity here? Let's get a read on the space with the CEO of Brunswick. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.